What's up, guys? Welcome to the Crypto Savvy channel. I am Craig, and we're going to go over the markets. So it does look like the pre-markets are opening a little on the bullish side. Let's take a look at that. As of right now, the Dow futures are at 417 up, S&P 57 up, NASDAQ 181. Will it hold, or will they just erase the gains? Let's take a look at our Dow Jones chart. So we fell out of this falling channel here. If you guys remember, once we broke over here, I had a target of 30,700. Now remember, when we get these targets, when they break below, those become resistance. We broke below, so this is our new resistance. Anything below this 30,700 range is bearish. I think we're still bearish unless we can break above that and get a daily close above. As you guys know, I think we have much lower to go. Our target, once we broke this doesn't mean we go straight down, just like it didn't mean we went straight down. When we called the 30,700, that was around January 25th, and it took all the way till May 23rd. So it took about 4 months. So once we broke below, now this should be our major resistance. We also have resistance here at 30,200. So again, we'll see what happens today, but that 400 range that we're up right now gets us back up here. Will it hold? Will we get back above? That is what we need to watch. I've told you guys over and over, remember that anytime you're watching anyone that's just charting Bitcoin does not really get it. All these markets are intertwined. We're going to go over the targets here. But what happens if this really does continue to be resistance? My next target's around the 25.8. Now, if this happens, remember, this is the 1929 Great Depression. You can see we had our lower low here, higher high, lower low, just like we had right here. Seems to be playing out beautifully. Now, even if we get to that 25 range, I do see a big rally back to the upside before the crash, the big crash. But remember, guys, this is a weekly chart. This took 2 years to bottom, and as you guys know, I think 2023 is when we'll see the actual bottom of Bitcoin. So far, it seems to be playing out. Let's look at the DXY. So the DXY, again, we're playing on this old support and resistance at 104.29 area. Remember, if we start opening and closing candles up here and get support, my next target's to go retest this 105 again. Once we break that, all this is one giant, let me go into the daily and show you, one giant bull flag. In my opinion, I do believe we are going to break up and out of this in a huge way at some point. When we do, that's when we'll be heading for the bottom of the bear market. All right, let's take a look at Amazon compared to Bitcoin. We made this chart on December 2nd. Seems to be playing out beautifully. I explained a million times, we'll have the drop, we get a bull trap to the upside, everybody gets bullish again, and then we drop again. Then everybody wishes they would have sold up here. Then we get bullish again, and everybody's screaming to the moon again, just to fall to a lower low. Then they wish they sold up here. Now, every time that happens, we never come up to, so if we break the 48, this will be invalidated. But every time we come up, we pump up, everyone gets super bullish again, and just to make a lower low. This is called making exit liquidity for a bear market. I still believe truly we are in a long-term bear market. I've showed you guys this. Everybody talks about the 4-year cycles. Well, everything's on a 4-year cycle because of the 4-year election cycle. It has nothing to do with the halving, in my opinion. I believe Bitcoin has been on a bull run ever since its creation, and now we are in its first actual bear market. The other bear markets that people were calling a bear market were corrections. I believe this is one big correction, one big bear market. So let's take a look at the weekly. As you guys know, we had our weekly sell up here when the 8, 13, and 21 crossed the 55 EMA. And everybody called me negative. Everyone called me negative up here. I'm not being negative. I'm telling you what the charts are showing. If that's negative to you, then possibly you're a little too bullish. It's actually positive if you know how to trade the markets. So anyways, right now, our 200 EMA lies around the 26.8 range, which would be our weekly resistance. If we go over to our monthly chart, let's Move this over to the monthly. As you guys know, we had our 3 black crows here with a little bull trap rally. I made a video back here right before this closed and said we're getting 3 black crows. That is continuation to the downside, or reversal of the trend. And we are getting that again. Let's see how this monthly closes, but it sure looks like we're going to get another 3 black crows. Now on the monthly, our resistance is 24.5, which is the 55 EMA. These are going to make sense when I go down into the smaller time frame. Let's take a look at that now. Well, first, we're going to take a look at, why are all these on here? Let me get these off here, guys. Sorry about that. Okay, so this is the macro trend, right? I had told you guys, once we break this, we usually come down to the next one. But over here, we came back, tested. We may see that again. Where is that resistance? Once we broke this, this gets us down to, depending on how long this takes, if it was to go straight down in a week, would be around 10,900. But I've told you guys about this. We may range in this area if we do come and get a bounce off of here before continuing lower. My best case scenario is still around the $6,500 to $7,500 range for Bitcoin when this is all said and done, if I'm correct, unless we break the 48,000. So we should have resistance if we get up to this point. And like I said, we'll go into the smaller time frames and take a look. But just to give you an idea, obviously this is not exact, but we could see something like this, bounce back up to retest here and continue on down, get that 13,000-ish level, get a nice bounce, get everyone bullish again. Could get all the way back up into the 32,000 range sometime in the beginning of next year, get everyone bullish. Come back down once we break this fib right here, come back all the way down to this fib in the middle or end of 2023. I've been saying this since we broke over here. We call it, I'll show you in the daily. If you guys are interested in trading, definitely check out Prime XBT, by far the best exchange in my opinion for trading Bitcoin, Forex, gold, silver, oil, S&P, Dow Jones, everything from one exchange. You can also have multiple trades in, longs and shorts. So you can hedge, you can have a bigger trade in and do smaller trades in between without clumping them all together. If you guys are interested, there's a link down below the video. You get up to a $7,000 bonus if you use my promo code SAVVY50. SAVVY25 will get you 25% off of your trading fees. You can use them both at the same time. All right, and also don't just jump in and throw a bunch of money in. You can join the contest section and trade for free and kind of get a strategy, get familiar with the platform before you actually put real funds in. And guys, don't trade on super high leverage, especially if you're beginning. Use 5 or 10 bucks and, until you get a strategy that works. All right, so this was our market structure call. 5 waves down. We were looking for an ABC correction. Everybody says I was super bearish last year, calling for 9,000. I was not. I was calling for a low of around 23. We obviously didn't hit that low, but we got our 5-way structure down. Then I said to look in the middle of June, which is when it happened, look for a bounce, a 3-wave structure, which is an ABC correction, would get everybody bullish again, calling for 100,000. That's exactly what happened. And boom, and then continuation down. Now, could this just be a wave 1, 2, 3 gets us down to that 68 to $7,000 range, and then we get a 4. But remember, if this is going to be wave 3, wave 4 cannot retrace past the 33. So that might be the big bull trend that everybody's going to think that was it, that was bottomed, and then we come down and make that lower low in 2023. Be cautious, be careful. Let's take a look at our resistance on the 4 hours. So it matches up with our other resistance. So here it is. This was my call for the top over here in 48. And obviously we had our targets, this being a big bull flag. Now, this is why I have these targets here. We're going to take them one at a time. Okay. So first off, once we broke this, our measured move for the break of that bull flag, the first one was just the measured move of this channel, which got us to that 25.5, which everyone called the bottom, just like they're calling the bottom now. But anyways, we hit that perfectly. Now what we do is we take this as a flagpole, this being the bear flag in blue here. We bring this over, and that got us that 17.7. I said expect a bounce there. We got a bounce. Now the question is, will it bounce all the way up to test the old support at that 24.5 range? That is a possibility. If that was to happen, I do see a rejection there, come back down, possibly come in here. We may range in here for a while before breaking, but once we break, even if we just came down and broke it now, once we break this 17.7, I think that's going to become resistance, and our next support is going to be around that 6,700. We've talked about this a lot, and that 6,700 is just a measured move from the break of the trend here. We measure that all the way down to the bottom, and then looking at this as a bear flag gets us down to that 67. Now, if we took it all the way from the top and considered this whole thing a bear flag, which that's not usually how I do it, just for shits and giggles, if we did do that, where would that get us? Excuse me, that would get us down to as low as 1,400. I'm not saying that's going to happen, but I do see between 3,000 and 7,000. And there's also a double bottom thing I'm going to talk about. One of our followers on Twitter, if you don't follow me on Twitter, please do. It's at CryptoSavvy1. Oh, before I go any further, make sure you smash those likes, guys. Take a second out, smash the like right now so you don't forget. Subscribe to the channel if you haven't already. Tick the notification bells to get you notified when I post new videos. Just make sure you smash those likes and leave your comments down below. Do you think we're going to bottom in 2023? Or do you think we have bottomed? Or do you think we have lower to go, but we bottomed this year? I'm curious to hear what you guys have to say. But anyways, that's what I'm looking for here, guys. That 24.5 range. Our 55 EMA is around 21.9 to 22. That may be our rejection area. As you guys know, I like to use divergence. Actually, we're going to go into this chart right here. I'll show you the divergence. So this is what I talked about yesterday. Right here, talked about this being a possible inverse head and shoulders, right? So far, it looks like that may have played out. But again, we have our 55 EMA on the 4 hour right there around that 21.9. So if we get up there, be careful. We could just get rejected and come down. Retest the bottom of this. This could be a rising broadening wedge, right? So if this is a rising broadening wedge, we would go from, let's say, it breaks out over here after bottoming at 13. And then we put this up top. Where would that get us? That would get us to that $30,000 range. Like I said, another big bull trap to get the hodlers to think that we're going to the moon towards the end of this year, beginning of next year, and then just a continuation to the downside. So far, I've been correct on this whole thing. It doesn't mean I'm going to be correct now, but so far, this market structure is playing out to the T. But let's look at our bullish case and bearish case. So if we get rejected at the 21.9, we could just fall right below. Once we break this trend line, we could be heading down towards that 13,000, 13,200 area, which would be around the end of June, right? If that was to be the case, that would be some pretty quick fall. Now, if we get above this 21.9, we could also look at, well, hold on, let me not get ahead of myself. This is the measured move from the break of that inverse head and shoulders I showed you from yesterday, 24.5. 24.5 just keeps coming up. But again, unless we can break the 22, I would be hesitant to expect the 24.5. But 24.5 is the measured move of this. Now, we could also look at this as a bigger head and shoulders. Right here, left shoulder, head. If we get up, get rejected at that 21.9, maybe come down to the 19,000 again, come back up, and then if we break this, we would have a measured move. We would measure, we would measure from the head all the way up to the neckline, and we would bring that to where we break out. Let's say we break out somewhere in this range, right? Which would be around the 26 to 26.5 range. Again, depending on when it broke here. But these are the bullish cases, guys. I'm showing you the resistance areas. I will be laddering in more shorts at all these levels. I'll even start laddering in some real low leverage, 2 or 3 X leverage. And I'll ladder in all the way up into these ranges. So let's see. Now, if we look at this as a rising or a falling broadening wedge, and we break that 27.9. But again, I think 24.5 is going to be huge resistance if we get there. Obviously, 21.9 is going to be pretty big resistance. So if this 21.9 plays out, if we get a major rejection there, I would start looking for these areas of 13. That's what I'm looking at, guys. Thanks for watching. Don't forget to subscribe to the channel. Give me a follow on Twitter. Smash those like buttons and subscribe to the channel if you haven't already. I'll see you in the next video.